All right, good evening. Here's a little quick checklist for all you who want to save taxes. First, ask yourself, am I doing everything to save taxes? Well, here's the checklist. All right, before we run through several tax deduction and tax avoidance ideas, let's talk about some basic concepts. There is not a secret tax deduction club that only a few people know about. Most people are interested in saving cash when they say they want to reduce or avoid taxes, but saving cash and reducing taxes are not necessarily the same thing. Two households making the exact same income might have a wildly different tax liability based on the myriad of variables, such as children, mortgage interest, charitable donations, available tax credits, and yes, the proficiency of the tax professionals involved. Get a tax advisor. So just because your neighbor or produce clerk says pay X amount doesn't mean you will too. Their taxes are not going to be the same. As how household incomes travel through the ranges, a lot of things happen, right? The first $100,000 in income for most households is well sheltered with itemized deductions and low tax brackets. The next $100,000 is in income sees several tax credits go away, and higher brackets start coming in. If you available tax deductions such as IRAs and other things, what we call income phase outs. The next $100,000 after that is beyond completely naked and is generally purely taxable, unless some tax reduction tactics are employed or deployed rather. The primary objective is to build wealth, right? Save taxes is secondary. Okay, try to build the wealth. What are the high level things that we like to talk about? Sell stock losers, offset gains. Don't just hold on to stocks because you want it to go moon. It might never. Budget review and business connection. Okay? State income tax arbitrage. There's things to do with the state levels. 401k, pre-tax versus Roth and IRAs. Health savings accounts, HSAs. The Roth IRAs, Roth conversions, donor advised funds, QCDs. Those are the high level ones. Okay? Now, if you're a business owner, you have things like optimized salary, pass-through entity deduction, PTE, solo 401k, pre-tax versus Roth, SEP IRA, profit sharing, defined benefit pensions, cash balance plans, reimbursements, accountable plan, home office, all internet, car, automobiles, business, own or reimburse, depreciation optimization with varying income, adding your spouse to payroll, adding your children to your S-corp payroll, adding children to payroll of a family management LLC, a management company. Okay, then you got real estate, short-term rentals, cost segregations, real estate professional passive loss ideas, 1031 exchanges, like kind on real estate transactions, and then you got your tax-free rental of your home, Augusta rule. Okay, then a couple of exotic things you can think about: medical C-corp, permanent life insurance plans, captive insurance, the IRS loves that one, family limited partnerships, flip, the FLPs and the LLCs, discounted Roth conversions. Those are exotic, a little bit harder to deal with. Conservation easements. You hear about all that kind of crazy jazz. So that's a couple of things you got to think about. Have a great day. Like and subscribe.